everyone. Now today we are going to start our next topic, that is called management accounting. As the accounting has different branches like financial accounting, cost accounting and management accounting. So management accounting is one of the important branch of the accounting. Okay, in financial accounting the more emphasis on the monetary transactions. It has focus on financial information, same as it is in cost accounting. It has more focus on the cost which is related to monetary terms, but in the management accounting it has focus on both as well, financial information as well as on non-financial information also. Okay, so in this video we have covered just an overview of management accounting, in which we covered like objectives, importance, key principles of the management accounting and what are the difference between these branches also. Okay, so let's get started. Very first we have the question that what is management accounting. So management accounting is a branch of accounting which focused on providing financial and non-financial information. Just we have discussed that only the management accounting which has focused on both financial as well as on non-financial information, which is given to managers within an organization so that they can take right decision at the right time. This information assists them in making informed business decisions related to planning, controlling and evaluating performance. So these information help the managers to take right decisions at right time regarding how to plan, how to control, how to evaluate the performance, to making strategies, etc. Okay, next to the move next slide we have some key functions of management accounting. So here we have discussed some key functions of the management accounting. Very first we have planning. So now the question arises, what is planning? Planning refers to thinking in advance or deciding in advance what is to be done, how it is to be done and by whom it is to be done. So here the planning includes that setting goals and objectives and creating strategies to achieve them. Okay, second one is controlling. Now the question is, what is controlling? Controlling means to comparing the standard performance with the actual performance, and if there is any variance or any difference between them, then the organization have taken some corrective measures to right them. Okay, so in the controlling, which include that monitoring performance, comparing it against plans and taking corrective actions if necessary, if any variations or any differences are exist. Now third one is decision making. What is decision making? When a company has many options, when an organization has many options and they have to choose one from them, then it is called decision making, choosing the best alternative. Okay, so decision making include providing relevant information to support informed choices. Last but not least, that is performance evaluation. Performance evaluation is also an important part of the management accounting, as it includes assessing results and providing feedback regarding the work done in the organization. Okay, now move to the next slide, that is scope of management accounting, which means that the areas which are covered by the management accounting. There are different areas which is covered by the management accounting. It has a wider scope. Okay, so very first one is the financial accounting. In the starting we have discussed that there are different branches of the accounting. Okay, and management accounting is one of the part of them. So very first we have the financial accounting. Financial accounting mainly focus on the financial transactions, financial records. Okay, and in which there is a financial statements has to be prepared. So financial accounting provides historical information useful for future planning and financial forecasting. Financial accounting provides some historical information which help the organization to take some future decisions like in future planning, future forecasting, etc. Okay, next one is cost accounting, which has more focus on the cost. So the cost accounting includes or provides various techniques of costing, okay, to find out the cost. So it is the process of finding the cost, okay, which are used in the process of planning and decision making, because cost is also an important concept in the organization. Every organization has the aim of to increase their profit by reducing their cost as possible. Okay, so cost accounting includes some techniques of costing which the organization used and which help the organization to take some various important decisions and in the process of planning. Now Next one is forecasting and budgeting. What is forecasting? Forecasting means to predict the future, okay, and budgeting is the process of making the budgets in the organization. Every department has to make a budget. After that, a master budget is prepared in the organization. So management accounting exercise the tool of forecasting and budgeting in the process of planning, controlling and decision making. So it helps in the making different plans to control and in decision making. Okay? So it is also an important area which is covered by the management accounting. Next one is tax accounting and tax planning. As we have discussed, planning means to thinking in advance. So here we can discuss the tax planning. It is very important to it is very important to analyze the tax provisions. What are the tax provisions for the organization? So it includes the analysis of implication of tax provisions on future project. If the organization decided to do any future project, then what are the tax provisions and what are the tax implications on that, to analysis this. So it comes under the management accounting, which is also an important part of management accounting. Come to the next, that is internal control and audit. Now the question arises, what is audit? Audit means to recheck the accounts which is already maintained by the organization, to check whether these accounts are okay or within the standards or not. So management accounting highly depends on internal control system existing in the organization to identify the weaker sections of the organization. If there is any weaker section which have to be focused by the organization, then management accounting helps to identify that weaker sections in the organization and more focus on the internal control system of the organization. Next is cost control procedure. It is very important to control the cost of the organization or any production, any cost, because it is the expenditure of the organization, so they have to control that. So management accounting also include cost control procedures like include inventory control, cost control, budgetary control and variance analysis, etc. Next one is financial analysis and interpretation. It includes the various techniques which is used in the management accounting, to analyze and interpretation of the financial data, like various financial analysis techniques such as ratio analysis, fund flow analysis, trend analysis are used. What is ratio analysis? Ratio analysis is a mathematical calculation which is done by the organization. Different ratios are calculated by the organization, and these ratios are used by the different users according to their need, like solvency ratios, liquidity ratios, profitability ratios, etc. Same as it is fund flow analysis, in which outflow of fund, inflow of fund is included. So these helps in interpreting the financial data of the organization. Now come to the next point, that is management accounting versus financial accounting. As we have just discussed that these both are branches of accounting, but at the same time they both are different from each other on various bases. Very first one, we have users. Both have different users. Management accounting is mainly used by the internal managers, because as the name suggests, it is a management accounting which is more focused on the management. So this is more used by the internal managers of the organization to take various decisions. On the same time, financial accounting has some external users like external stakeholders, investors, creditors, etc. Next one is purpose. What is the purpose of both accounting? Management accounting has a purpose of decision making, planning, control. As we have discussed that management accounting is helpful in taking various decisions to make plans and to control in the organization. On the other hand, financial accounting has main purpose to reporting financial performance of the organization, in which different financial statements are prepared. Next one is time orientation. Management accounting is future oriented, because the plans, the decision making are only for the future, not for the past. But the financial accounting is past oriented, because it is based on the historical information. Next one is rules. In the management accounting, there is no prescribed rules or any standards which they have to be followed by the organization. So these are flexible and based on the needs of the organization. But on the other hand, The financial accounting is governed by accounting standard. There are some standards which have to be followed while preparing financial statements, okay, and there is a proper prescribed format which is used while recording the transactions, but in management accounting these type of things are not exist, okay. Next one is focus. Management accounting is focused is selective and provide relevant data which helps to taking various decisions. On the other hand, financial accounting records all mandatory transactions, okay, which is focused on financial information on the organization. Now come to the next, that is cost accounting versus management accounting. Same as it is this, these both are also the branches of the accounting, but at the same time they also are different from each other on the various basis. Very first one is objective. Cost accounting has find out the cost of products or service. The main objective of the cost accounting is to find out the cost of various products, and in this various costing techniques are used. But on the other hand, management accounts main objective is to provide information for decision making, for planning, for making strategies, budgets, etc. Okay, next one is nature. Cost accounting has for both past as well as for present, but as we have just discussed that management accounting is only for the future, because we have to take decisions in future and making plans for the future, okay. Next one is scope. Cost accounting has some narrow scope, but the management accounting has a wider concept. And one more thing, that financial accounting and cost accounting both are old concept, but management accounting is a newly developed concept, so that's why it is also called modern concept. As the next point which mention that age, okay, cost accounting is old concept and management accounting is the modern concept, and it has a wider scope. Last but not the least, that is principles. The cost accounting has followed some principles and methods which they have adopted while costing the products. On the other hand, in the management accounting there is no specific principles are adopted. We have discussed in the previous slide that no prescribed formats are used by the organization. They are just doing the management accounting according to their needs, okay. Now move to the next point, that is what are the main objectives, and we can say that what are the main goals of the management accounting. So very first one we have that to provide timely and relevant information for decision making. Management accounting is mainly used for decision making, so that's why taking right decision at the right time is very important for the organization. So to provide timely and relevant information for decision making is the main objective of the management accounting. Next one is to assist in planning and controlling operations. Different operations are done in the organization, so to assist the planning and controlling of that operations are also the main objective of the management accounting. Next one is to improve efficiency and effectiveness of the organization, okay. When the operations are properly controlled and planned, then automatically the efficiency and effectiveness of the organization is going to be improved. Next one is to support performance evaluation. What are the performance of the organization, the workers, employees, okay. So to evaluate that performance or to support that performance evaluation is also an important objective of the management accounting. Next one is to ensure the optimal use of resources. There are different resources which is used by the organization, like human resources, financial resources, etc. So these resources are limited and scarce, so the organization has to use that resources properly. Optimum utilization of resources is important, so the management accounting ensure that the optimal use of resources okay. Now come to the next, that is the techniques and tools which is used in the management accounting, or the methods which is used in the management accounting. Very first one, that is CVP analysis, which is called cost volume profit analysis, okay. In CVP analysis it calculates that what is the impact of the various levels of cost, various levels of volume of production on its impact on the profit. What is the impact on the profit of the various levels of cost and volume? So these are calculated by the organization okay. Next one is to break-even analysis. Break-even point is a point where the total cost is equal to total revenue, means the point where there is no loss or no gain at zero level, okay. So break-even analysis is also a calculation which calculated the break-even point, okay. Next one is marginal costing. Marginal costing means it is also a technique which is used in the management accounting for the additional unit of product. Okay, if the organization used any one additional unit, then how much there is increased in the cost. For example, if there is a 10 units is equal to rupees 100. Okay, each unit is of 10 rupees, and if one unit is add like 11 unit is equal to, then the cost is also increased by the 10 rupees, that is equals to 110. Now with increase or additional one unit, that 11th unit, there is an increase in the cost. Okay, so this is techniques which is used for calculating the cost of additional unit. Next one is standard costing. Standard costing is also a techniques which is used to analyze the variance between the standard cost and the actual cost. Okay, if the organization set a standard cost and the actual cost which is actually exist or happen, so both these are compared, and then if there is any variance between them, then the organization has to take the corrective measures to correct them. So standard costing is used there. Next one is to budgetary control. Budgeting means to making different budgets. Okay, so budgetary control means to compare the standard budget with the actual budget. Okay, to compare both. This is called budgetary control, to control that budget. Last but not least, that is ratio analysis. Ratio is also a mathematical expression which is used by the organization. Okay, different ratios are calculated, and these ratios are used by the different users according to their needs, like liquidity ratios which helps to check the liquidity of the organization, solvency ratio helps to check the solvency of the organization, profitability ratios helps to check the profitability of the organization, etc. Okay, move to the next point, that is the importance of management accounting. That what are the reasons to maintain management accounting and why it matters in the organization. Okay, so there are the following reasons. Very first one, that enables the better decision making. Management helps the organization or management to take the right decision or better decision making in the organization, which helps to in the smooth running of the organization. Next one is to improve operational efficiency. As we have discussed in the previous slides, that management accounting helps in the proper planning and controlling of the operations of the organization. So automatically the operational efficiency of the organization is going to be increased. Next one is to facilitate effective planning and control. When there is a proper planning and control of everything, then the automatically operational efficiency is going to be increased. There is a effective and efficiency in the operations. Next one is to enhance profitability. When everything is going to be right, there is a proper operational efficiency, effectiveness, then it also enhances the profitability of the organization. It helps to enhance the profitability. Next one is to support strategic management. The management has to make various strategies to achieve their goals. So management accounting is also supports the strategic management of the organization. Now come to the next point, that is ethical considerations in the management accounting. There are some important principles, ethical principle or ethics, which is used in the management accounting, like integrity, objectivity, confidentiality, and professional competence in the organization. Like there should be an honesty in the work, straightforwardness. Okay, there is no biasness in the organization, in the work, etc. Or there should be an confidentiality of the information. So there should be a privacy of the important information which is used in the organization. Security concerns. Okay, after all these discussion, now we have come to the conclusion of that topic. Management accounting is a vital tool for an organization seeking to achieve their goals. Management accounting is an important part for the organization. Now day by day it is going to be important for the organizations, okay, because it focuses on both financial as well as on non-financial information. Unlike the financial or cost accounting, which is only focused on the monetary or financial information, it is focused on the both, okay, which is important for the organization. So by providing relevant and timely information, it empowers managers to make informed decisions. Management accounting is also helps in better decision making and take right decision at the right time, making proper plans, proper controlling of the organization, making proper budgets, strategies, etc. So all these things are help to improve the performance of the organization, and it drives success also. Okay guys, so this is our topic, that is management accounting. Thank you.